Thank you, everybody. Thank you, Sergio, for being resilient in your endeavor to continue to promote, payment services industry and innovation in this sector. And obviously, thank you to the panelists of today. The discussion, indeed, the title there says that we're going to speak about FIDA. In reality, I think we can enlarge a bit the scope of the discussion, because what we saw at European level this year is actually a very broad regulatory package proposal. And that includes FIDA, indeed, about financial data access framework, but includes also PSD3 and PSR. And it also includes, I would say, the Digital Euro project that was also put on the table. Yeah. So in reality, all these things are linked. If you want, I can go even broader. We also have the European Data Act, which also has connection with FIDA. If we are now to zoom in on the discussion today, what we're seeing and what I'm proposing to the panelists to discuss is a very ambitious endeavor at the European level to stimulate innovation via regulation. And some could say, is this the right way to stimulate innovation? Maybe that's one of the points to discuss, yeah? Also, a key point that we're seeing is an enablement of the data owners to really control their data. A lot of the things we're seeing in FIDA, but also in PSD3 and PSR, is about giving the data back to the customers. And the customers are entitled to decide who else should have access to their data. And guess what? The data holders will have to observe that request. Yeah. Now coming back and, let's say, trying to approach maybe a bit more systematically what we're discussing, we have here representatives of the businesses directly, representatives of industry associations, and representatives of a banking regulator. Yeah? Maybe to start, as it is worthwhile to pay our respect to the regulators, I would start with you, Raluca. From your perspective, being head of payment oversight in National Bank of Romania, what is your perception from the regulator's perspective by reference to this package? Were you guys as regulators involved in the consultations, and what is your reaction as of this moment?
Good morning. Thank you for the question. Yeah, indeed. So I'm here today in my role as a supervisor of payments in the Romanian territory. So we are in charge actually with PSD2 requirements since 2019. So that makes us very active also today when we are talking about PSD3 and PSR, but also when we are talking about FIDA. So yeah, indeed, we are part of the negotiation. We are taking part of the meetings. We are sending actually technical and legal requirements and clarification to the European Commission and the European Council, taking also in consideration the market requirements. So we have very strong active collaboration and communication with banks and also fintech companies, which will be actually the principal actors in applying the new requirements. And if I'm actually referring to your question, if the regulation is actually supporting innovation, I will say that yes. For example, in the case of open banking, if we are looking a little bit back, before open banking and PSD2, it was like the data is owned by the banks. The data is not client property, so it was needed actually to put in place this type of rules in order to make it mandatory. Yeah? And we started in 2019, actually in Romania, after implementing this directive, PSD2, to build this open banking ecosystem. And right now we see that some other steps are actually needed. Yeah, we have PSD3 on the table and PSR with new requirements on open banking and on new, let's say, challenges. Yeah, in terms of the APIs, but also on strong customer authentication. These type of requirements in order to have strong security measures in place. But coming to FIDA, it might be that also for the FIDA, it's a very, very good step to actually promote this type of services, because if you are reading the recital of FIDA, you will find there that one of the reasons for which customers are not actually very open to share data with third-party providers is the fact that this is not regulated. They don't trust actually this type of services which are not regulated. So FIDA is bringing or it's putting on the table requirements in order to build trust, and to support this type of services in the European market. So this is actually how we think, and it might be the cases that, for example, in some situation or in the future, some elements not to be so clear, needs to be more clarification on how actually FIDA will be implemented, because we know we have this experience with PSD2, so we expect to have some challenges. But in short words, we strongly believe that regulation is actually supporting innovation. And I will close with another example into this direction, instant payments, because instant payments had a very slow adoption before being regulated, and we heard before that we have instant payment regulation actually approved and starting to be implemented in all member states. It's important to know that it's final decision on the form of the text, so we have a final decision and of a success of the trialogue at the European level, so it's very soon to be actually published in the official journal and being implemented in the member states. And it's another very good example showing that regulation is supporting innovation. Without this type of mandatory requirements, markets are moving slowly, unfortunately.
So I guess you just gave a very good reason why we do need regulation, which is, I think, I would pick 2 points from what you said. One is third-party trust, people saying I'm confident to have my data transferred to somebody else because I know that somebody else is subject to certain regulations, maybe it's going through a licensing process, and depending what type of entity it is, but also somehow pushing, I would say, the traditional finance sector, the banking sector, into implementing and spending money actually on the technological upgrades to their own, let's say, legacy systems, because facilitating all this data interaction with third parties and with the customers and so on, requires an effort. And once it's in the law, you have to make that effort, because otherwise, strictly now I'm speaking as a lawyer, I mean, under the banking rules, any bank can share client data with third parties if the client wants so, I mean, both for banking secrecy and for GDPR, client consent is enough, in order to allow data transfer. However, when you want those to be instantly, electronically, then you want to have dashboards and so on, then you need to indeed invest and spend money on the technology behind that, and the regulators provide a stimulus, I would say, in that respect. How is that seen? Well, maybe a few, just a clarification. FIDA expands the scope of PSD2, okay? That's the idea. PSD2 opened the gates to open banking for payment accounts, FIDA comes and says, we implement pretty much similar rules, okay? Even go broader than that, and beyond that, for other type of data, investment products, mortgage loans, crypto investments, whatever, For whatever data, the concept of open banking now will encompass also those, And it's clear also that they coordinated with PSD3, because some of the obligations in PSD3 about making available dashboards to the customers, we see them also in FIDA. So they're all actually correlated. How is this endeavor, whether we speak about FIDA or PSD3 or PSR, seen from the industry perspective? You being, amongst others, representing the European Third-Party Providers Association.
Thank you. So before starting, I would like to make 3 comments. First is to congratulate Sergio and his team for an event that gets better every year. So it's incredible. Second comment is some very good news from yesterday. At the EPC board, we approved the first set of default fees for SPA, which stands for those of you who are not familiar with it, for SEPA Payment Account Access Scheme, which will go live at the end of the month. And it was, for those of you who are not familiar, it's a scheme-based approach to provide PSD2 and beyond payment services, transactions and information with a fair distribution of value and risk, which is the same thing as saying that in exchange for a fee. And it's a source of inspiration for both FIDA and PSD3, who took it into account. It's a 5-year project already. And third comment is, although I'm here representing EDBPA and perhaps the Spanish FinTech Association, I'm not a born lobbyist. I've been in the industry since before it existed. So in 2004, I launched Eurobits, which was the first account information service provider in Europe, which I ultimately sold to Tink a couple of years ago. So now trying to give back to the industry what I gained from it. And now addressing your point, there's a concept which I've been hearing lately, which I love, which is regulatory innovation. I think this is very relevant that a certain geography stays ahead of the rest in terms of regulation, because that gives certainty and comfort to the investors that they're investing in something that will be sustainable in the long run. And you can think that in terms of Europe, but you can think that in terms of EU member states. So the one that transposes earlier and the one that develops transition regulations gets a competitive advantage. Unfortunately, we've seen situations in Spain where fintech providers could not provide their services in Spain because transposition was late. I think we're the worst, one of the worst countries in terms of transpositions in Europe, and we had non-Spanish providers that were able to provide services in Spain. So that's really bad. You should aim exactly for the opposite. Then with that said, I think we have to distinguish between political intention of regulation, which in general, I would tend to agree it goes in the right direction. But unfortunately, the devil hides in the details. And the lawmaking process in Europe is so slow that it gives a lot of room for those details to hide everywhere. And I'm going to give you a number of examples. For instance, in PSD2, it was supposed to foster innovation and competition subject to a high level of security. So security was the subordinate part to the others, not the other way around. And who did we ask to look after and oversee that? An institution that doesn't have innovation and competition in its mandate, which is the EBA. Actually, its mandate goes in the opposite direction, prudential supervision. So it's no wonder there are many details that make lives of TPPs more difficult after the introduction of PSD2 than before the introduction. I see many TPPs struggling to survive when actually it should be exactly the opposite. And another example you mentioned, instant payment regulation, which I think is one other key package because it's going to potentially eliminate execution risk for account-to-account payments. But you have things such as an instant payment needs to happen in a 10-second framework. 10 seconds is not good enough for proximity payments. So if you're going to a store, there's a long queue, and if the payment needs 10 seconds to be executed, it's not going to work. So guess what? Banks, at least if I were a bank, this is what I would be thinking of, would release something that they would call light speed payments or whatever. And that would be a premium service and would not be subject to many of the aspects of regulation. So we have to be very careful to make sure that the details of the different pieces of regulation align with the political objectives. A concrete aspect that I want to mention, where you said about the complement between FIDA and PSD2, I think we have to be extremely careful to not leave account information services out in the blue. So ultimately, in the future, I guess information services would move out of PSD whatever and move into another legal framework, but we must be very careful that there's no void and that is done in a proper manner so that they transition adequately from one legal body to another.
I would expect PSD2 licensed entities to be qualified under FIDA as FISP, as financial information service providers. Yeah, and indeed, it would be a right point that they don't have to go again through another licensing process for the same thing. By reference to what you said about transposition and the devil is in the details, I would take the risk and make a prognosis. I believe FIDA currently, it's in an incipient form, yeah? But I believe the lesson that was learned at European level with respect to PSD2, and which now generated not just PSD3, but PSR, which is a payment services regulation, I believe that will apply also by reference to the approach under FIDA, because what the European Commission figured out after, I think, 8 years, yeah, how long it passed since PSD2, something like that, yeah, is that exactly being a directive, it allowed for a fragmented approach at European level. Different legislators transposed in different ways, and different regulators took different interpretations. And this is actually the very reason why now we have on the table PSR, which is Payment Services Regulation, which will take all the definitions and a lot of the core aspects from PSD2 and put them in a regulation. The logic of a regulation being it produces the same effect across Europe, is not subject to any transposition. Yeah? So I do believe we'll see the same technique by reference to FIDA. So we've heard, we are closing the warming up of the discussion. After we discussed, we took a regulator first reaction, the industry first reaction. I would go now from a direct business, yeah, Panagiotis, to you. How do you relate, yeah, maybe even in more concrete terms, yeah, as a business, yeah, to all this, legislative package, whether eminently focused on FIDA or the broader?
Thank you. So, what I'd like to do is that I would like to go a step back, because we are now discussing about all these terms, that might not, so everybody might be familiar with the terms. I mean, FIDA, PSD2, PSD3, SPA, instant payments, whatever. I mean, it might be in our day-to-day or in some of our day-to-day, but not everybody has to be familiar. So if I take a step back, I think it makes sense to understand. So we are now discussing about open banking and open finance, right? So if you look at what's happening in a global scale, what you're going to see that you have, let's say, 3 options how you do this. And then you start with open banking, right? So one is that you regulate. So as Europe has done, as the UK has done. So PSD2 was the, let's say, regulation that brought open banking, among other things, into perspective. So that's one thing. Then you have the market-driven perspective, which is the US, right? And then you have something in the middle. For example, India is doing this. So I think what you're gonna, if we take a closer look, what you're gonna see is that data is taking a central stage. And also, for example, so that's one. The second thing is that if you see, for example, take a look at the US. So these guys have been letting the market decide how to do it. You have companies like Plaid dominating the market. And now they are also taking a second thought and they're also going in the direction of regulating with data in the middle. So I think, back to the original question, some kind of regulation is needed so that we can speed things up. So that's one thing. And the second thing, coming now to the US space and to all this discussion that we have been mentioning, so we have PSD2 that has been introducing open banking. And now you have PSD3 together with PSR that is improving open banking, right? But it still is open banking. And you have data playing, let's say, a more important role. So data is now taking, again, center stage. And on top, we are discussing about the transition to open finance. So this is, let's say, the discussion, right? So, and just for the sake of understanding what's the difference between open banking and open finance, I think it's the scope, right? So open banking is limited to the account side, and open finance is a broader scope, including other products.
What was called open banking up to now was pretty much open payments rather than open banking.
So the idea was, so open banking is, let's say, the core of the open banking is the account at the center, right? And this has been the case. So PSD3 and PSR, and we're going to debate how these are matching, but I think this is probably a bit too detailed for the audience. So it's still open banking, and it's trying to address the inefficiencies we've seen so far. And then, because we are discussing about the transition to open finance, we have a different, let's say, piece of legislation, which is now addressing open finance. And it's called FIDA, and it's basically a data legislation, right? And that's why, that's why it's part of the name. And just to close this, let's say, introduction on my side, I think FIDA is important for two things. The first one is that because you give consumers control and businesses over the data, so you have a dashboard and you're able to decide what exactly you are doing with your data, right? So that's one. And the second thing is that you are adding this remuneration element on behalf of the providers. So you have the so-called data holders and you have the so-called data users, right? So if I'm a data holder, so let's say a bank, and this was one of the weaknesses of PSD2 actually, now you are able to ask for a proper remuneration so that you can provide access to this kind of so-called premium data. So I think these two things in a nutshell are the ones making the difference and driving the open finance transition, if you may.
Thank you, and absolutely agree about the fact that everything is centered around data. It's a clear acknowledgement at European level that we are already or definitely moving into the direction of a data-driven economy, and that goes hand in hand with the acknowledgement of the fact that we are and continue to be moving more and more into a digital economy. Yeah.
And same happening in the US. So if you look at the US, what they have been publishing so far, it's again a data-driven innovation legislation, similar to what we see with FIDA. So you have the consumers and the businesses controlling the data with a dashboard. So this is a trend, I would say, a global trend, how you're going to do this.
Definitely, and I'm really glad you brought up US, exactly because I was going, let's say, moving now from the initial thoughts, yeah, to think about the strategic direction maybe in which Europe is going, yeah, because indeed US was not first to regulate, yeah. Europe seems to have taken a very clear view that when it comes to technology, we may not have had a Silicon Valley up to now, but what we want is to create a regulatory framework across EU that would stimulate and I would say even push the innovation. It's more than just creating a framework to allow innovation. To me, it's a very clear push for that because essentially, and that started with PSD1 and continued with PSD2, we see it in PSD3 and now with FIDA, gradually the regulators are forcing, because when a new obligation is introduced by law, that means you're forcing the players to actually invest in technology, invest in digitalization, invest in integration of systems, and there are discussions about maybe a pan-European API, because one of the problems is indeed the fragmentations also at technological level. But now thinking about, okay, what's going to happen? Yeah, so we have, by the way, FIDA and PSD3 are not really coming into place next year, yeah? I mean, it's more like 2025, yeah, I think we're discussing, yeah? Yeah, optimistically, yeah. Which means there's also enough time. So the question is, what should the players, so when I say players, I mean, again, the banks, traditional players. By the way, FIDA also covers, investment products and so on, so it also covers investment managers, yeah. But, what should the industry do, knowing now what is the roadmap? We know the roadmap, yeah? The legislative framework is there, a lot of pages to be read, yeah? But the question is, okay, how should the industry, whether banks or third-party payment service providers, how should they position themselves, whether from regulatory perspective, business perspective, technology perspective? Who wants to pick this up? Yeah.
I will try to express my view on this. So, actually referring to banks, yeah, because you mentioned two types of payment service providers. From my point of view and having in mind what we have seen in these last years, I would say that banks already started to change the mindset. Yeah, and I'm not talking about actually allowing access to payment accounts data. No, I'm talking about actually looking at PSD2 from business perspective, not compliance, yeah? Because when we started PSD2 and open banking, it was a compliance requirement.
I can confirm this very concretely. 2019, we at Deloitte did a survey of the banking sector in Romania. 70% of the respondents mentioned that they only have budget allocated for the compliance part of PSD2 and not for the business part.
Exactly. So this was the, let's say, main reason also in Romania for the slow adoption of open banking services, because we didn't have banks actually starting providing this type of services, even though they should have been the front runner, yeah, because they had the license. Starting 2000, actually, I think maybe this year, actually 2023, they started to change the mindset and to understand that PSD2 is also about business, yeah. So they started to look and to understand how they can build value-added services for their clients. And I know that banks are actually putting on the table strategies, concrete strategies about open banking services. So this is what we think that banks should do and actually should continue doing. Going to TPPs, yeah, this is different work here. What we have seen, it's about the fact that, yeah, we have very, very good tech guys understanding the business perspective of the open banking services, but they are not prepared actually to understand and to comply with the requirements in the field of financial services.
Raluca, you stole my question. I was definitely going to ask you today, why do we have only 2 licensed TPPs in Romania? Yeah?
So yeah, actually we started in 2019 when we launched the FinTech Innovation Hub. We wanted to have a contact point with the market and to understand what are the bottlenecks, yeah? And one of the bottlenecks is indeed the licensing process, which is not user-friendly, we know it. It is not supposed to be user-friendly, so this is not something that should be understood as being easy or accessible by anyone. But still, we are so open, and we had in this last year so many discussions with actually with companies approaching us in the licensing process, and also not officially in the licensing process. Yeah, so we actually trying to support payment service providers, the new one, to understand the expectation we have when it comes to the regulatory requirements. Yeah, we have the same rules in the European Union. Yeah, it might be the case that in some countries the regulators are more strict when it comes to reading and fulfilling a requirement, but still, we think that they should prepare a little bit better, yeah, when they decide to come and apply for a license. So this might be one of the reasons, and this is our recommendation for them. not to be shy, actually to try to come to the central bank, to present their ideas, to present their questions, or to actually put some questions or request clarification in order to be able to fulfill the requirements. Otherwise, I'm afraid that it will not be possible actually to have more players in the market.
And moving from unregulated industry to a regulated industry is not an easy job, I guess, for anybody. So that's one of the messages. It's great when the regulators are open to, you know, to attend consultations and answer questions. But if I may say, if it was difficult up to now for non-regulated entities to get a license, I'm afraid it will only get harder. Why? Because, you know, up to now we had PSD2, but now is PSD3 and PSR coming. Is going to be also this new act coming about financial data access. But on top of that, we have DORA, cybersecurity legislation in the financial sector. So the volume of compliance is not likely to decrease, on the opposite. All these acts provide enhanced rights for the market players, but they also come at a package with related obligations. Yeah. So preparation, I would say, is key. From industry perspective.
If I may, more than an industry perspective, a company perspective. So I said that Eurobits started in 2004. We did what was then called account aggregation, not only of payment accounts, but any kind of product you can imagine, and not only financial products, but telco and utilities, invoices and current consumption, etc. So we went from an unregulated space to a regulated space. We were the first institution to obtain a license in Spain. It took us like 1 year. And we had to start even before transposition using the Van Winkel, I think it's called, case that you can apply for a license even there's no transposition. We've only found burdens and no help from the supervisor. So according to the supervisor, everything works fine. APIs in Spain are broadly exempted, although the exemptions are not published. So you cannot take neither the supervisor nor the API providers to court. So you're completely defenseless. Fortunately, we had very good alternative technology, but we had to keep maintaining our legacy technology, which was a mixture of screen scraping and reverse engineering, and develop a new APIs. I think we spent around 4 million euros in developing APIs which simply do not work. Only 1% of the traffic when I left Eurobits was going through APIs, and it was going through APIs because some of our larger banking customers wanted to have minimal traffic in order to be able to prove to the local supervisor that they were trying to use the APIs and that they were not using it on a broad basis because they simply did not work. And then I also went through the experience of selling the company, and it took 8 months to go from SPA, sales purchase agreement, to closing, because you need, if you have some of you may not be aware, but if you have a supervised entity and you want to sell more than 10% of the equity of the company, you need to get a non-opposition from your local supervisor, and it took 8 months to go through that process, even though the buyer was a company that had the exact same licensing regime in a different EU member state. So something that could have been a matter of days or weeks.
Welcome to the regulated entities world. Yeah.
But the thing is, in 8 months, many things can happen. And we went through some of them. Typically, when you sell a company, the buyer asks you to provide a list of critical employees, and if one of them leaves the company before closing, they are free to walk away. And we did go through that. Fortunately, we were able to negotiate with no impact. But the deal could have been killed just because the local supervisor was very slow. So we need to improve lots of things in order to make supervised entities attractive to investors. and to really foster innovation.
Definitely not easy to combine innovation with, with regulated industries. On the other hand, I'm afraid that if we want to make this work, if we want the traditional finance, the banking sector to cooperate with the innovators, if we want the regulators to enable this cooperation, because again, the regulators are more and more imposing obligations on the banks. Yeah, the banks would really have to spend money to be compliant with both PSD3 and FIDA. Yeah, then we also have to, I'm afraid, accept the regulatory burden. But I do agree that a lot can be improved. I'd say in Romania, licensing process proved to be a big stumbling block for the industry. But if you speak about processes like what you've described, change of control and so on, my experience, the process is strict but quite smooth. I mean, it's not supposed to take 8 months.
I agree with what you said, but there are different approaches to regulation. And to me, regulation, particularly if you want to foster innovation and competition, should be more principles-based and outcome-oriented rather than prescriptive, which is what we have in Europe. So both for to being part of the licensing regime, it should be more open and more give more. The law says that, at least in Spain, that in terms of ownership, payment institutions are bound to the same obligations than credit institutions. In principle, I have to comply with the same requirements than Ana Patricia Botín, for instance, which makes absolutely no sense. But the law says that they can apply subjective criteria to diminish those requirements. But that is not enforceable because no public servant is going to risk his employment by applying that.
Well, maybe indeed, and this is part, I think, of the voice of the industry that has to make its way through the legislators in Brussels, yeah. Because maybe indeed one of the solutions to that is regulating via European regulations instead of directives. Because regulations, if they are clear enough and detailed, I mean, they don't really leave room for interpretation locally. Yeah, and that kind of discretionary approach that you mentioned, and what we're seeing, but I don't want to move it to PSR, but what we're seeing in PSR actually, it introduces even a number of situations which cannot be invoked for refusing access to, for example, providing bank accounts to payment institutions. So somehow the regulator is going into that direction. I would say, because you mentioned about, brought some terminological clarifications about FIDA, and one of the things there obviously is about the data holders and data users and so on, and just bridging what we have discussed so far, and the business case for the industry in general, including banks, yeah. Indeed, FIDA introduces the concept of remuneration. In other words, if you're asking me to provide me the data, I worked hard to collect the data, maybe to filter it and so on, so it's fair that I get paid for that, especially since to the owner I have to provide it for free, by the way, which is a cost I have to incur, yeah. So introduces that, but also, a bank can be in the same time a data provider and a data holder, yeah, so it can look at both sides, and adding to that the fact that the hope, at least a few years ago when a lot of what was written about open banking, the hope was more that fintechs and banks would rather cooperate and not look at each other as, direct competitors and enemies, let's say. Putting all these things together and thinking about the strategic preparation maybe of the sector for FIDA, what would you view as actions or things to consider?
So, I think we do have an oxymoron, because if you take the open banking opportunity for banks, so let's take a look at what banks have been doing over the past many years. If you look across banks, there is one topic that is consistently top one. And you know what is this? Digital transformation. Ask any bank, and you're going to see a huge budget around digital transformation. And this is a never-ending story. And if you take a look at the status of this digital transformation, you're going to see that most of the times, this is about modernizing their core systems just to be many steps or one step or two steps we can debate back in terms of innovative capabilities versus the fintechs. And now, on the other hand, they have this opportunity. They have open banking, meaning that we are now in an API-based economy, as I call it, meaning that if you look around, you get your mobile phone, everything is working in apps, you have the APIs connecting, one place to the other, and they're not taking advantage of this, right? So they see this as a compliance burden. I mean, we have been discussing, they have been, under PSD2, forced to provide the APIs, but even in this case, they haven't been providing APIs that were stable enough in most of the cases. So, in most of the cases, they were just saying, I have an API. If this is not working properly, that's okay. So there was nothing to be done. And on the other hand, there has been very little done in terms of identifying the opportunity that is actually the connection to the innovation, right? So taking this other view and trying to understand, okay, what kind of business models can these new regulations, but at the end of the day, can they enable? And I think we have a lot of opportunity here. Now this FIDA, for example, with the remuneration, even though this is a reasonable remuneration, so I think that's to be underlined. So it's not that I can charge anything I want, but okay, that's a first step. But there are lots of opportunities for banks to kind of, let's say, turn the tide and look at how open banking can enable these new business models. And if you ask me, you have, for example, this platform finance, right? So everything is now working as a platform. So that's one thing for the banks. You have the embedded finance opportunity, which is connected to the open banking. So these are things that are worth looking at for banks, for the industry. I think what we have been seeing is that when we started, you had this competition element between the fintechs and the banks more. And now I think over the past many years, what we see is that we have seen more partnerships, so that they do things together. So I think that's probably going to continue, even though they might be competing on the one side, because that's inevitable. On the other side, I think there is lots of opportunity to complement each other. And I think they just have to be open-minded. I mean, in parallel with having this huge budget addressing the digital transformation, which is basically a back office thing, I think they have to allocate some of these resources to have a look at how this is going to impact their strategy, their business model, which is very, very important for them to continue to exist going forward.
Could we open the question to the room?
Thank you, everybody. If there are any questions from the public, we can try to answer.
Just one question. Okay. You look at me, but I'm going to take Anna.
Thank you so much for the very insightful discussion in the panel. Appreciated all the suggestions. I would like, nevertheless, to ask, could give one or two examples of what PSPI do wrong when they apply for a license. Is there something in common to many of them when applying? Are they not prepared sufficiently in terms of systems, AML, anti-fraud, business case? If you could give us some examples, particularly for Mrs. Miku is the question. Thank you.
Clearly, a question for Raluca.
So I think actually the hardest work for them is to read the regulatory framework and to understand the language because it's not a very friendly one. But yeah, indeed, it might be the case that there are on fraud. That means that it might be some issues on actually also for the security system, for actually understanding how to present the business model and actually how to translate the tech language into the language of the regulator, yeah? Because if we are talking one-to-one, for them it's very easy to explain what they intend to do and how they intend to address all the requirements. But when it comes to actually writing all these elements, so putting in the file, actually, all these elements is not so simple, yeah? And also referring to the regulator, yeah, for example, it's important to understand the technology, the business model, and how actually they are putting in place all the control elements, the security one, the fraud one. So this is, from my perspective, the challenge. So it's not only for them, but it's also for us, yeah, because especially if we are talking about technology solution, yeah, so very innovative and new solution putting in place in the market, yeah. Before open banking, we only had classic and traditional type of solution, being actually very easy for the regulator to understand after years of experience, yeah.
Thank you, Raluca. Guys, I'm sorry, but you want to add something, Andre?
No, just a quick comment on one of the things that Raluca said. Welcome to what in Brussels they called creative ambiguity. So this is the result of the lobbying process. So remember, there's an individual sitting at the desk in Brussels that is hearing voices from left and right and has to make a decision on how to write things. And typically they settle for something that makes both sides equally happy, but that requires a lot of ambiguity. And sometimes not even the supervisor can interpret what they meant.
Two sentences at my end. That practical experience as advisor, we are seeing such files. They usually come to us after they've been doing back and forth with BNRF for 1 year or even more. And what we're seeing is that they were all underestimating the level of granularity and attention with which BNRA is looking at those files. And that translates into terminology, into clarity of what you're explaining, into matching what you're explaining with the framework. Other than that, thank you everybody for the panel.
Amazing panel. Thank you, guys. Round of applause for our panelists. Awesome.